So welcome back to the graveyard shift, or the final session of the day. I think we've probably got the best bit, really, because we're going to have some drinks at the end of it. So we're going to just bring back the panel, the guys here. We're going to have Hunter Paul, sorry, come and talking to us about mental health, and then we're going to have some closing comments from me, like the bars down there, and then to finish the day. We're going to bring the box back, so anybody who wants to ask a question, I'm really good at throwing, so you can have a go at that. And I'm not going to go through Slido again, because I'm hoping you've all now worked out how to use it. We're going to do it slightly different than we did last year, which ended up just being a series of questions to the panel. These guys know what they're doing and what they're talking about, so we're just going to have three themes, really, from today that we'll just talk about. I'll set a question off and then get the guys to comment as they go through. So we're going to have a theme about consumers and what's happening out there in the world and what we're seeing. Theme about regulation, and then a little bit about collections and sort of processes. You know, what's going on and what these guys are seeing. So aim to have it done in 30 minutes, and then open out to questions and to the audience, and I'll do my best to try and read them. Just introducing the panel. So in no particular order, Sam. So Sam Challenger, Head of Collections and Customer Experience at Billing Finance. Very career in collections, covered most sectors, personal loans, telco and credit card. And she's also worked within the debt recovery industry with DLC, which ultimately became part of Cabot. Next we've got Sheraz, Group Legal, Risk and Compliance Director at Quint, and also Board Advisor for us at COEO. And he's also worked quite closely with the Consumer Credit Trade Association. Mr. Sykes, wealth of experience, operational and compliance, and also in the past a board member of the Credit Services Association. Stuart's a Liverpool fan and a whole rugby league fan, and I think we'll just leave it at that. And then another Liverpool fan, Tony Gundersen. I don't know what have I done. He's head of operations at Onmo, experienced senior management professional across financial services and fintech. I bet it sums it up, doesn't it? So, just moving on to the first topic, really, consumers. I'll start with Sam, just out of it, but what we're seeing, what are you seeing at the moment with consumers? What are the challenges out there? Is it cost of living, or we talk about that a lot?
We do talk about it a lot, and we use that word tsunami all the time, and I don't know if we've talked ourselves into it, that there's a tsunami of debt coming, or whether there really is one coming. I think people have changed how they spend. I grew up in a society or a group of peers where we spent on our credit cards. We did a lot of various payments on our credit cards, and then we made one payment at the end of the month, and that was easily reportable on credit reference agencies. We've now got a generation of people who maybe shy away from credit cards, or maybe don't get them because of, well, all sorts of reasons, but Klarna's easy. Other buy now, pay laters are just as easy, and they choose to use a buy now, pay later. Does it mean it's any different to if I had 15 spends on my credit card versus 15 buy now, pay laters? In my head, because obviously I've been in the debt industry for far too long, it seems strange, and I would rather deal with one payment every month than 15 different ones, because I find that quite challenging. But this younger generation have grown up multitasking. They've grown up doing 50 different things at once at a pace of 50 miles an hour, and everything is 24/7 living. So maybe we should challenge ourselves around, is buy now, pay later this big bad beast we in the credit world are thinking it is? And I still kind of think it might be. I still kind of am on that side of that fence, but I'm not sure it is everything we thought it was. And when I've challenged myself, I've thought, hang on a minute, you were offered a buy now, pay later when I had some car tyre protection thing. They were like, oh, you can pay it off at, and I was like, it's interest free. Well, why wouldn't I just do that? And my husband was like, it's £100. I was like, yeah, but it's free. So I did it. And if I'm doing that, well, why's anyone else not doing that? So I think we do need to challenge ourselves on that. I think the big problem is we can't see it on the credit reference agencies. So when we're doing our debt assessments, or whether we're doing our lend assessments, we are a little bit blind to it. But is that tsunami of debt coming? We spoke about that last year. Last year we said it was coming and it didn't. Yeah. This year we say it's coming. Well, we're in March now. I haven't seen it yet. People are talking about it. There's a lot of fear. There's a lot of noise in the paper. I'm not going to say there isn't. But I think we need to just stop talking ourselves into things and maybe just go back to the data and say, is that data really there? Are we hitting people the right way? Are we giving them the right levels of communications. Are we giving them the right tools to make their payments? Because those self-serve customers, the people who are doing the buy now, pay laters, they don't want to talk to me. They want to make their payments at 3 a.m. when they're doing 50 other things and they have just come in from a night out or just going out for them, whatever else. They don't want to, they're not my generation. They're not doing it my way. And I laughed when I saw Bob's slides earlier about, I saw Anthony Sharp's name. And it tells you how old I am. He was one of the people that trained me. And I can remember him telling me about a different financial crisis and saying, you can't tell people how to behave, and you can't tell people how they need to change their behaviours because crises have come their way. Someone who has been able to have unlimited spend or whatever, and then suddenly they've lost their job or illness has happened or a divorce or a separation, who are you to then say, you need to get rid of those animals? And I can remember him telling us about someone having to get rid of horses and you can't tell them to tear up their old clothes for rags. I mean, this is 20 odd years ago he was telling me these things and it still sticks in my brain now, and I say to our agents, you can't tell someone that they have to give up their gym membership or they have to. You can, guide and you can point them in the direction of pay plan and debt management societies and whatever else. I said, but life is changing, and the challenges I grew up with and the idea of debt and consumerism that I grew up with is different to what's happening now. And I think we all sit here, we're of a similar generation-ish. But we're not the 20-year-olds, we're not the 19-year-olds, we're not that new generation that's flooding the market with their different spending habits. And it's having them on your panels, and it's having them in your groups of people when you're having your discussions. When you go back to say, well, what are customers looking for now? I'm in car finance now. And I've got 2 daughters who are in their mid-20s, neither of which own cars. And I found that bizarre. Okay, they've got licenses, but why wouldn't you own a car? Well, I live in London, what's the point? Okay, when I want a car, I just go to one of those car apps. And I'm like, you what? And she does, she just uses a car app and she comes up in someone else's car that she's borrowed for the weekend. I find that so bizarre. I've got to challenge my business model because we're in car finance. What if this new generation don't want to buy cars? Same with credit cards, same with buy now, pay laters. I think we just need to go back sometimes to basics, and when you're having those discussions, just because it's different doesn't mean it's wrong. It's just different. Maybe it's evolution.
Yeah, but I agree. But when we look at, say, 08, 09, when we had the financial crisis, the difference there was people were credit hungry but couldn't get it. We're not that now. Okay, we're not in where we were in those that went through 08, 09. You can tell those were the ones that are greying and bald. We all went through that. But it was a different scope to what we are now. This is cost of living. There's credits out there. After COVID, and we weren't doing a lot of credit, people, as we saw the charts earlier on from Equifax, there was no real demand. Nobody wanted it. Nobody was going anywhere. Nobody was going on holiday. Nobody was doing anything. So you've now got banks, financial houses, that, even VCs that pump money into financial services saying, I need to get this out there, make some interest, pay my shareholders, everything else. So there's credit there. The difference is, to your point about a different generation, this is the consumers that we're seeing at Zilch, and nobody say BNPL. You don't want to see me when I'm angry. Don't say BNPL. Our logo is green as well. We're not a BNPL. We have a facet that is BNPL, but we are on a card. And you can use us anywhere MasterCard is. Just a little plug there. So, but we're not BNPL. It's about being consumer hungry, credit hungry. And consumers are using products now that suit their need. One of my eldest kids is 27. He doesn't own a car. He does the same thing. Everything's on his app. Everything's totally different to what I was like when I was that age. It's a different world, and we understand that. But from a consumer point of view, the demand is there. The demand is there. And I think, what the government are looking at, when you look at BNPL, you look at credit card, even the overdrafts that never really got sorted out, and they promised for years they were going to do it, but they never did, is, somebody turns around and says, oh, well, you shouldn't allow somebody to buy their shopping at Asda on a BNPL, but you'll use a 40% Vanquish card or an egg or eggs. They've gone now.
That is your age.
I worked on that product, Aqua card and all those. But they're 40%. Some of them are more than that. But the BNPL and some of them, like ours, is free. So why is that a problem? I don't understand this.
So it's interesting. So a couple of points what you said. Yeah, look, in Evo we operate a bunch of low marketplaces. Plug. That's the thing we're doing. That's fine. Won't be anymore. And yeah, look, what definitely happened was demand subdued, right? So, animal spirits, yeah, to your point around, do we sort of make this stuff happen by saying it's going to happen? Well, of course we do, right? Because everyone's saying cost of living crisis, and so people's animal instincts to spend have been subdued. Overnight on our marketplace, you know, all the big banks went, we're not lending, right? And actually, and right now their lending criteria are tighter because everyone's a bit scared, right? Everyone's going, oh, cost of living crisis. Actually, how do we know? We don't know. The FCA are kind of getting involved going, what are you doing? Well, we don't really know. There's no data. But you have to be seen to be doing something, right? So there is this kind of bizarreness where some people that really probably don't need the credit probably aren't then doing some of that discretionary expenditure. Those that do need it can't get it. Everyone's going to tighten their criteria. And I think you're also right because, you know, and I am talking about buy now, pay later, buy now, pay later. You can tell I'm mixing up my my disruptors there. It's what a lot of nonsense this all is. Honestly, right? A credit card is buy now, pay later. A credit card is buy it now and then pay it off interest-free in 56 days, right? It's not new. People have been doing it for years. It's just a credit card without a credit card, right? So actually it's a worse product. The reason why it's working is because there's no credit checks being done, right? So they're stopping that. And the reason the market is scared, maybe we're all doing it now and that's fine, right? But the reason the market was scared, and we all kind of went, buy now, pay later, are the big boogeyman, not because of the product, because actually it's an unfair competitive advantage, right? So if you're just out there to make some money, and let's be fair, most of us are, because actually that is the point of business, right? And it's sort of okay to talk about making money and being a sustainable business model, because if you're not sustainable, you can't be trading and then you can't deliver good outcomes to customers if you're not there. But that's why we're all a bit scared of it, because you know it's an unfair advantage, because they can do what they like with impunity and we can't, right? So, you know, the market has spent ages trying to be slick, trying to reduce friction, trying to make it easy to deliver the cash to those bank accounts, but the regulator says you've got to do these things. Information disclosure, the BNPL sector doesn't have to. And that's why everyone's quite a bit grumpy about it. Simple as that, in my view. Everything else is just nonsense and hokum. But that's changing now. But I think some of the behaviours that are happening, you know, the consumer behaviour in that market isn't visible. I think what we have to say is the dashboards that we all look at around appetite for credit, demand out there, we can't see a huge chunk of it, right? I've got a theory, this is me really showing my age now, and I can take this theory back to pre-crash, right? But basically, here's the thing, people borrow money to spend it, right? So it's all about consumption. And now we talk about, well, so you know what, consumers have always borrowed money to spend it, right? So you suddenly had payday as a big sector servicing millions of customers not there anymore. That gets clamped down, and up and, you know, the BNPL sort of sector mushrooms a bit. Why? Because there was consumers here who couldn't get access to credit where they used to, and they went over there. And actually, it was easier for them. Instead of having to borrow from somebody over here to then go and pay that person, they could just do it right there. And so actually, if you take 30,000 feet away from it, that's a better outcome for customers, actually, because instead of having to borrow from over here to pay him over there, you just went to this guy over here and went, can I buy that and get the money off you? But I think my main point is we make a lot of information, you know, we're just used to seeing all this data and we think that data's right, but it's probably not, because consumers' behaviors are changing, people are spending in different ways, and all the people, like the bureaus who spend, anyone from Bureau still here?
There he is.
They make a life. They make a living out of selling us extrapolated data from a very static data set of a payment ledger. You know what? So they've got to kind of say, look at this, look at this, look at this, and actually it's not telling us everything. And as consumer behaviours change more and more, the traditional data sets become more and more out of date, and we all become a bit like Star Trek 4, really show my age now, when they're about to crash that Klingon ship and Captain Kirk goes blind as a bat and out of control, and there may be a little bit of that going on.
You got a slide?
Yeah, no, I think in terms of the cost of living, we to go back to there, what's interesting, because obviously employment is still there, and I think one of the graphs showed before that it's more about disposable income, the fact that people have got less. Everybody will be the same, you know, all our utility bills, that's the biggest hit. But a lot of people are being propped up at the moment. So you saw the other figure on the chart was the amount of benefits that, because people are going out there for looking for support. and it's whether, you know, it's too easy to get support. I don't know, because there's going to be a cliff end point where that support goes, and that's maybe where we'll start to see a difference in people's ability to keep up with their payments when they've got less support than they have at the moment. But I think it's about the same discipline that you've always got in terms of interrogating whether people can afford it or not afford it. I don't think anything's changed. There's nothing too dramatic yet. There's open banking, but it just gives you, you know, same information in a different way in some respects. So you're just using another bit of data to help you to make an informed decision. But it'll be interesting whether there's certain points along this next 12 months where the impact of things are rarely seen. I'm not sure we're seeing the impact of everything at the moment because of the way people are being propped up. I think certainly from where I am, we're seeing no lack of demand for our credit products, certainly the credit card. But it is interesting how the aggregators have changed in terms of, you know, sign up, check your credit score. And a lot of the younger generation, that's their thing, you know, about, you know, well, is my credit score this, is my credit score that? And whilst they've signed up, by the way, would you like this product, would you like that product? So they're making decisions based quite differently than we were, I think, many years ago. But I go back, I agree, actually, what people want to do, they want money to spend on something. And I don't think people's appetite in terms of spending has really changed. They may, in some respect, be getting a different way. So if their disposable is slightly different, maybe they can't pay for it up front, and they're going to have to borrow to get that holiday or whatever it may be. But certainly from our point of view, the demand for credit cards
I think structurally the market's going to change, right? Because everyone's used to cheap money. And that's really profound. And I think there's a whole generation of people in the industry and consumers that don't quite understand what that means, right? So I remember interest rates for your mortgage being 7%. Loans are not going to be... Literally, there was a point where it was cheaper to get an unsecured loan from HSBC or First Direct than was to get a mortgage, right? That's bonkers. That's probably never happened before, never happen again. And I think that's not washed its way through to what consumer behaviour is like, right? Because typically, you're seeing it now with PCPs and cars to motor finance, yeah? You're seeing that now, because I'm a sad old man, I'm on piston heads, and I see people complaining on chat rooms, middle-aged old men complaining on chat rooms about how expensive the next lease is, because money is more expensive. And I think people's consumption is based upon their servicing costs, and if funding is more expensive, if prime mortgages are more expensive, that's going to wash all the way through. That's going to take, I think, a number of years, and who knows what kind of impact that's going to cause. That, to me, is the great big unknown. And I think we in these sort of the unsecured end of the sector, you know, that kind of tail starting to wag, and it'll take a couple of years before it starts to affect us. But that's going to be really interesting to see how that changes consumer behaviours.
Yeah, just moving on to regulation, I probably know the answer to this, but what's the biggest regulatory factor that's currently impacting Stuart?
It's impacting me, nothing. It's one of those things, and Mark spoke about it more eloquently than I could earlier on today, but, you know, consumer duty stuff that's coming through, and we've all do TCF, and we all live through TCF and CONC and all these lovely acronyms that came out. And I think most of us in the room, you know, from a creditor standpoint, and then using COEO as our sort of debt recovery agency, you know, at 61 past due, it's about being in lockstep. And my thing that keeps me awake now isn't particularly what we're doing, because I think we're in a good place and we've worked very hard to make sure that we are compliant with it. It's about making sure that our partners are compliant. And that's always been the big thing with consumer duty for me. It's about making sure your partners are more compliant. TCF was always about you. And then once you handed it off, yeah, you were responsible, but it was more, what are you doing? Whereas now it's, oh, you've handed it off, it's still your problem. And that's the one thing we've got to, I think all of us have got to start to just take a step back and look at, and to your point of this 30,000 feet view is, you know, we're good, we're excellent, but actually if all my partners are awful, I'm still going to get hit over the head. And people have got to start to understand that a little bit more.
But even though we're good, we're all good. We've all been through TCF, we've all come on board with the FCA, but I think this next expectation is even more. We've gone through that, yeah, we're all right. Then you go back again and you look at it and you're like, well, if the FCA look at that one agent who's doing that one thing wrong and they choose those group of accounts and you can't evidence the outcome. I put notes down earlier around, so we we give everyone free money advice. It's on the back of all our letters. Well, what evidence have I got of how many people are doing something with it? Yeah. I don't know. I don't know. We might have it, but top of my head, sitting here today, I'm like, I don't know if I've got enough. I know how many people are now coming to us with, got a debt management company on board, but while they've still got their asset, obviously that's not part of their DMA plans. So it's quite a tricky one, and I think there are other examples like that where you sit here and you think, well, we're doing all these things, we're saying all these things, we've got a list of various partners we partner with, and we'll say, okay, we'll go to Gingerbread if you're a single parent, or here's Cruise if you're bereaved, or whatever else. But can I, hand on heart, show the FCA the evidence that says we did this and they got a better outcome off the back of it? I don't know. And I think that's going to be the challenge, whether it's with our partners or whether it's with ourselves. I think we do still have to challenge ourselves around, are we doing enough? Have we got enough evidence?
Yeah, I think internally, certainly what I'm seeing is that there's more people having to take responsibility within the company. Whereas with TCF, a lot of people just looked up and said, well, somebody will deal with that. I think with consumer duty, there's a lot more individuals that have to take responsibility, whether it's for the product or whether it's for a process somewhere, because we need to be a lot more clearer on what the outcomes are. So if you've got, for example, like us, if we've got a credit card, and we end up with everybody just taking cash on that credit card, that means somewhere in the journey we've not made it clear what's the appropriate use of the credit card, or again in the customer support scenario, as you said, people can't just blankly sort of give information. They've got to be able to understand, well, what's the impact of me giving that information. Very much like we would have said in the past, well, you can't recommend something if you're not an expert in it. Yet at the same time here, we're expecting customer support agents to be able to recognise vulnerability, do something about it, but I think more there's a broader responsibility, and as you said, part of that broader responsibility will be, are we actually looking at the outcomes and not just that point where something is said?
I think the key thing from consumer duty is two things. One is to echo what Stuart said. I think it's a real step change for them to expect the market to cooperate with each other for good outcomes, with having co-manufacturing, manufacturing distributors, manufacturing to make sure that they're telling their distributors. So in the marketplace, be careful what I say, because I think two of the providers on this panel operate on our marketplace. I think the deadline's the end of March. I've got 50 lenders on my panel. I've had 2 people so far tell me what their target market distribution criteria are, which I suspect means I might have a busy last couple of weeks of March. So that's just quite interesting. People kind of grappling with that. I think the other really interesting thing about consumer duty is the FCA basically saying, yeah, we're a price regulator now. So the FCA is really proud of its price regulation, actually. They did it with PPI. We basically said, look, it's not a bad product, but you're just basically taking people's trousers down and charging them way too much. And then, they kind of had this alternate redress methodology that basically said, good product, just too expensive, right? So they quite like that. Then they did it with payday. Then they basically said, look, this is the ceiling price, and they go, this is save people loads of money. Then they've done it with general insurance, haven't they? To say, look, you know what? You can't charge people, repeat customers more. You got to charge them the same. That's huge. I mean, we haven't got many insurance colleagues, I bet, in the room. Huge market disruptive thing, right? Fundamentally changing people's business models. And now they're doing it with price and value assessments. And I think that's almost like the stealth torpedo from the regulator in consumer duty. And I think to appreciate the trajectory of that torpedo, you have to take it back to, was it 2008, when the FCA or FSA at the time did their common failings consultation on PPI, right? So consumer duty is 14 years in the making in that price regulation. And goodness knows where that will end up. Because you've got people in the FCA who, lovely people, love them to bits. Some of my best friends are regulators, right? And they're not in the business of making money, right? They're in the business of ticking boxes and keeping us safe, right? And at the same time, they want us to take risks. But those are two quite difficult things to reconcile. So I reckon that's going to be a whole box of fun for us in the future.
Yeah, I think because market competition is probably one of their, original statements of aims, and what they tend to do with a lot of things they do is crush that competition within the marketplace, and that's, makes it more difficult to, put yourself out there as something different, something unique in there. And maybe this may be slightly different in as much as you've got to start challenging yourself a lot more in terms of your product and who the audience is, and is it right for that audience? Will they get? So there could be actually through the process, we've made something rise out of it actually that where you really do take it. Because if you look at the information that's going around, everybody they seem to look at, they say no. You think you've got consumer duty right, but you haven't. So we're all sitting here thinking well, yeah, great, we know what we're doing, we've got our strategy, we've got all the guys doing what they're supposed to be doing. What we don't know at the moment is that good enough for what the FCA want? And I think that's part of the issue, is that we will find out. Probably the insurance industry will find out first, but they'll quickly be into our industries as well. So I think we've got to be conscious of that probably don't be too sort of complimentary on yourself and what you do. And we need to probably pick it to pieces once again once we think we have got it right, because it'll be a fluid situation. It'll be because each time we think we've got a good outcome, and then we find out afterwards that you're going to have to go back and change something. Every time you change one thing, there's a knock-on effect on something else. So I think it's going to be quite a process that is going to be very fluid and ongoing, even to the point where, as a lender, we go on the panel and then we decide we want to shift slightly in who the profile of customer is. We're going to have to go back to you and say, actually, we're now changing our mind. Don't be sending us anybody like this, because we now want somebody like that. And there'll be a crossover period. And, is that situation then against the consumer duty, because you've got that period where you're still sort of got stuff in the pipeline, and you just then sort of decline it rather than try and make something of it. So I think it's going to be a bit more complicated than I think we first thought, but we'll all get through it. It'll be a bit of pain, but I think, and it could be there need to be a bit of collaboration between people in companies, to try and support and understand what works and what doesn't work. But definitely it'll be fluid, and there'll be many iterations of what we have to do.
I think the final topic really is about collections, and I think we've got probably about 5 minutes left before we open for questions. But I've got one here, and it's just really what new collection tactics have you excited? Just think what's out there that you think, well, I'll tell you what, that's going to be the way forward. I know we touched on it earlier, where we see it in 5 years' time, but what do you think's out there that you think, well, actually that's going to be a bit of a game changer?
I think for me, algorithms on phones and smartphone usage is one that's going to, if it's right, will work really well. So it's something that I'm looking forward to. It's expanding, and I spoke to people last night and here today on this sort of topic, but it's something that's out there, and looking at the algorithm, we're always on our phones. I think, this morning's session, it was 40% phones many years ago, now it's 99%. Yeah. And we're all on our phones, we all pay on our phones, everybody, we all even, myself, longer in the tooth, everything's still on my phone. Yeah. I don't use it for anything. But there's a lot of algorithms, a lot of MI and AI around phone usage. When is that person on the phone? How can they use the phone? When do they use the phone? So if you're targeting people at certain times of day with a push note and other things, at a certain time of the month as well, then you'll have a higher propensity to pay, and you'll have people more engaged. Yeah. And that's coming through more and more. And it's that real, there's always a misconception between AI and machine learning. AI is Terminator. We're not going that far. It's machine learning, and it just learns, and it knows. It's not an AI, but it's a machine learning. It knows that you use your phone at this time of day and when you do it, when you get paid using and linking it into an open banking app. So those things, when you put them together, all of a sudden you can get a 20-30% increase in payments at certain times of the month with little notifications to a customer.
Brilliant.
I'm not sure if you look at the collections, is about contact and getting some resolution with the customer. So I think whatever innovation to do, they're still aiming to do exactly the same thing. Whether it was years ago where a letter worked, and nowadays it's a customer portal work. So So in some ways, I agree. It's the data behind it. You know, how can we be more efficient with the data? How do we really start to understand the data that is going to be most valuable to us in that regard? But I don't think it will take away the need for your customer support agent. There's still a place for a lot of the traditional methods because they're the ones that might just surprise the customer.
Yeah.
But it's that low-hanging fruit. But
It's the choices.
Yeah, and it's that. You know, my staff will all say, I use 80-20 all the time in the office, still do now. You know,
I do.
The 80-20 rule. And the older ones in the room are all laughing because we all use the 80-20 rule, and I do, because I'd rather have the agents doing that 20% with real care, real attention, understanding that if they've got vulnerable or they're in distress in some way, and not looking at the clock like we used to back in the day of AHT, and what are they on 280 seconds AHT and all this nonsense. Take all the easy stuff away, take that low-hanging fruit further and further away, and have some really well-defined trained staff, really talking to that customer and understanding their problem. That's key.
Yeah.
Absolutely right, Tony. I totally agree.
It's giving the customers all the choices that they can do it any way they want, and then being able to support your staff, because we've taken away all the easy calls. The calls we used to all have, that were easy calls every 10 minutes. You had phone. Oh, you make your payment, fine, perfect, go through. Our agents don't get that. They get call after call after call. That's tricky and hard on them. So it's making sure that you've built in enough resilience for your agent, enough downtime, enough support, because they are the heart of your business. They are the front facing to all your customers. So it's making sure of that. So
I think it'd be really interesting to plug ChatGPT and just see what happens.
It will be interesting.
I know, but just see what happens. Yeah, I do wonder.
you try it first,
Yeah.
and then we'll wait and see.
I will. Watch the space. If they write back next year,
Yeah.
I'll let you know. But I mean, I also think it'd be an interesting sort of thing to go. You know, I think we obsess around what we see on the conversation when we talk to them. I don't know if it has any impact. I just wonder whether these customers... I'd love to do an A/B test, right? Here's a bunch of customers, and you just contact them and go, hey, you know, you missed your payment. Would you mind? Right? And then the other one, we do the whole thing, right? And then just see what the difference is, right? I have started that test. I will let you know next year if they invite me back.
Fair enough. And I think more complex journeys are starting to be handled by self-serve, because I think a lot of customers don't want to speak to us. Maybe it's not even they don't want to, they can't bring themselves to. And at the points where sometimes people are ready to talk and deal with their debt, it is in the early hours of the morning, or it's when they've psyched themselves up to, and they ring and we've got long queue times, you know, we'll get back to you shortly, and, you know, we'll call back in 10 minutes, whatever the answer is. So I think self-serve is where they're going. So they are disclosing on portals, and they're disclosing in other ways, and then they're giving us the opportunity in kind of downtime to set up those plans. So I think we are getting there.
I just want to underline that point, Pete, right? Because I think that's really important, right? Because why can't you pay? It's not because you're feckless, right? It's not because you've gone... Well, probably not. Probably not. You know, a deference to the first-party fraudsters out there, you know, we're after you. But for most of the people, they can't pay, right? So shit's happened. Life has happened, right? So right now, you're missing payments, bills coming, life is happening to you, you're grappling with life, right? Some call centre person's ringing you. Right? You don't want to talk to them. Why not? Because you're busy dealing with life. Stop life dealing with you. Hello, Mr. Person, I can't pay you because I'm busy over here dealing with life. And that's fundamentally what the old school collection methodology is designed to do. And I think that's nonsense. And I think that's why we're seeing portals work and self-serve work. Not because those are better medium in and of themselves, but because they better fit with consumer behaviour and what consumers are kind of going through in their lives, yeah?
I hate inbound phone calls. I absolutely, phone rings, doesn't matter who it is, other than maybe my direct husband. It's like, for God's sake, I was busy doing something. Yeah. What are you doing? Ring me. Can't you text me? Can't you be a normal person and text me?
Be a normal person.
I'm not the only person that thinks like that. Why do we expect our customers to answer the phone to us and then have a productive conversation with us and disclose their deepest, darkest as to what has gone wrong in their lives to complete strangers who've interrupted their day, and then we say, okay, we can take that payment from you now, please.
Yeah, please. Yeah.
Why would you? But we all do it. That's what the industry does, and we've done it for years.
Well, I think the portals have opened up a new way, because they initiate the contact in a different way, don't they? So as you say, you can SMS somebody, give them the link, and then at some point they may very well go onto the portal just to have a look.
This is the sales pitch that Tim gave me when he wasn't giving me a sales pitch, right? So I went for, I mean, he's here somewhere, isn't he? I bet he won't mind me telling the story, right? Because it's actually true. Like all my stories, they're all true. But literally, he just joined. He went, Sheraz, we're different. He said, you know what, we don't. I said, Tim, come on, you do all this ninja, right, stuff. Which move works the best? And I said, no, Sheraz, because you know what? We sort of nudge them. He says things that are really clever, and I put them into behavioural science speak, right? But he exercises these nudges. He does, I don't know which of the 100 nudges we do has the impact, but we do them. And that's what's happening, right? You're not, that's why I say WhatsApp, hi. I'm not just saying hi, I'm just giving a nudge. I'm just reminding them. Yeah, but you're absolutely right. It's exactly what you said, right? It's the old school methodology is just nonsense.
I know you've all asking questions and none of us are looking at them.
So sorry.
Has anybody got any questions that I saw can throw the box at you? Or you want to, should we just...
We really want to throw the box at someone.
Can you get Robbie to throw it out?
Let's take it to your throw-in is.
Go on.
Oh.
Hi Andy from Webio, great panel. So you mentioned personalisation, such as using phone data to know when to ping them to get a better propensity to pay. What other sort of examples of personalisation are you folks sort of using or been thinking of or hearing of which have been working particularly well, and maybe also particularly well for engaging the younger demographic?
That's a good question.
So we've started thinking about TikTok, which has made me go even grayer than I was before because, oh my God, what? But marketing keep telling me it's the way to go. One of my titles is customer journey and all of that, and maybe it's the way to go. But it's just for information. It's not necessarily going to get me to money coming in the door, but it's going to maybe build the trust, build the information, and get it out there that actually you need to be a bit savvy. And actually, in my world, you've got a car, you need to look after it, you need to pay for your car, you need to put the right fuel in it, you need to MOT it, and you need to have insurance for it, because apparently in this day and age, insuring your car is a forgotten art. So I think TikTok, I think just vlogging, doing more videos, doing blogs, just being more personable. And I think education, if we can all go into schools, even if it is just your local schools, and do a bit more educating. I think we've been talking about educating in schools for the last, 30 years. We're still talking about it because guess what? We're still not doing it properly. Kids come out of school not knowing how to budget, and then we're surprised when they can't budget their finances. Yeah. So it's all the little bits, the nudges, whatever we want to call them, and it's just getting people's focus into who they can trust. If you go to a lender, you should be able to trust that lender. You shouldn't think of them as the scourge of the earth or the whatever you want to, we've all called bankers certain words, but it is just those gentle nudges, just being a bit more focused.
And the personalisation side as well, we've been speaking about open banking for several years, now it's there and people are using it, some aren't. But again, for me, if you use OB correctly, there's a real personalisation in there. If somebody has set a payment, set a payment up for the 20th of the month, but they don't get paid till the 30th, well, they've set up a failure immediately. So why would you do that? If you've got the open banking data, you know where it is, you nudge the customer, you say to them, are you sure? Are you sure you want to pay on the 20th? We'll move it to 30th for you, or we'll move it to the 1st. It's just those little nudges, it's those lazy payers that we know always affect your book, all the time. And you can use that with personalisation, understand the customer. But with cost of living as well, you can start to add some parameters in there and say that, your spend was X, now it's Y. If there's a 20% difference, I can contact you a little bit more, give you a bit more of a nudge to say you okay.
So on personalisation, I'll give you, I've not done this in collections, but I've done this in remediation, where the goal is to give money away, which is just fundamentally easier. But not as easy as you'd think, actually, right? When you look at response rates and whatnot. Personalise your language. Talk to the customer in the way that they might, like you said earlier, I say it all the time, be a human, right? But humans are different. So who has a different set of templates for ages 20 through to 28 and through to 50 to 55, right? If you do, you are world class at customer experience. I haven't met anybody yet that's got it, right? But as soon as I say it, you go, yeah, that makes sense, doesn't it? Because if you're a 55-year-old, what type of person, you're probably going to have a different expectation about how you want to be approached, maybe a letter. and not a text would be, you know, but are we doing
No
that
emojis
really? No emojis. No emojis. Whereas, you know, an 18-year-old just like a sort of, you know, quizzical face. You know? Where's your payment? That, I think, is really powerful. They call that mirroring, don't they? Yeah, so I don't think we do enough of that. I think we broadcast, and we don't think enough about, you know, sort of inviting a conversation.
So I think probably, sorry.
No, I'm just saying we're an app-based business, so in some ways it's more intuitive because obviously you're going to speak to the customers via the app and straight away it almost seems more personal because they're in their app and you're responding to something that's in there. But, you know, the mistake would be to then sort of try and go away from that and sort of use other methods of communication when clearly you've got that captive audience already. They're going to keep the app. They want to see what the balance is. They want to check what's going on. Obviously, if they were to delete the app, you know, you've got to go down a different route. But generally speaking, is try and understand, you know, maybe what was their journey to come to you in the first place. Therefore, they're likely to want to be responded back that way. But certainly, with being an app-based business, then, you know, you can, with probably not as much effort, look as if you're personalising the messages and the notifications because they're coming direct to that person straight away.
So I think we're about done really, because I know Sam needs to go and get the train. So I think probably the learning for me for next year is probably have the panel for about an hour and a half, 2 hours in the afternoon and we'll be done. So
yeah, I prefer the couches though, Pete. The couches are more comfortable.
Bring back the couch. Bring back the couch.
Me and Caroline were really worried about stools, weren't we? So yeah, thank you very much. I think that's great, and we'll aim to get Robbie on in a minute.
Thank you very much.
Thank you.